I think the markets are significantly underpricing in the risk of further rate rises from the Fed this year. Philip Uglow, Chief Economist with MNI Indicators. The US economy appears to be looking much better all of a sudden, especially on the back of strong retail sales for April. How do you assess the US's economic performance at present?
Yeah, I think the retail sales data certainly suggests that the economy, at least on the consumer side, got off to a better start to the second quarter, and that followed obviously what was a very weak first quarter. And particularly pleasing, I think, to see sales, bounce back, excluding, gas and erratic items, and that provides a better guide to underlying trends in the economy. I think overall, we've been a little bit more optimistic on the US economy than maybe other economists. And I think overall, 2016, we're looking for moderate, albeit not sort of stellar growth around the 2.5% mark or so. I think notably, while April showed a slowdown, employment growth remains, relatively firm on a trend basis. The labour market is tightening, and gradually, rising wages should help to drive consumption growth this year.
Okay, well, as you mentioned, a surge in consumer confidence provides some evidence that consumer spending is likely to strengthen further this year, which, in turn, would leave the US's economy in a better position to deal with external headwinds. To what extent do you think this will be significant?
Yeah, no, I think that is very significant. I think the consumer is going to be the driving force of the economy through 2016 again. If we look at some of the recent data, consumer confidence, had weakened in recent months, but actually the Michigan Consumer Survey, showed a strong bounce back in May to the highest in 11 months. And I think, maybe those earlier declines were somewhat driven by, what was happening in the stock market earlier in the year. And I think now that those sort of external factors have settled down somewhat, consumers are now feeling a little bit more optimistic and can concentrate on some of the more positive things. We've got unemployment down at 5%. Wage growth, as I said, ticking up slightly. It's certainly not at a very high level, but it's ticking up a little bit. And the housing market's put in a very good recovery from the financial crisis. So it's not too surprising to see consumers feeling relatively good. And I think, that high level of consumer confidence, coupled with the continued job gains, as I mentioned, that should help to drive consumption growth. And that's very much needed because we have seen a lot of weakness in the data, with headwinds coming from the manufacturing sector, and also the external growth picture for the US. That's weakened considerably given the slowdown in global demand.
And lastly, the US interest rate market still seems unconvinced that the Fed will do as promised and hike rates this year. What is your position on these potential moves?
Yeah, I think the markets are significantly underpricing in at least the risk or the possibility of further rate rises from the Fed this year. Markets are now not even fully pricing in one 25 basis point hike by the end of 2016. The way we see it here is that already the Fed's met its labour market remit. Unemployment's at 5%. While some of the growth data has been a little bit weaker, particularly in Q1, the underlying fundamentals still look pretty positive. And if we look at inflation or core measures of inflation, they're now running at rates, which I would say were consistent with the inflation mandate of the Fed. And again, going back, there's been that little bit increase in wage inflation as well. So, my own view is that the Fed should now be looking to normalize official rates. And I think I'd still expect them to hike twice by the end of this year. As to the timing, that's always very difficult to know. I wouldn't rule out June. It's not our central case. But I think the Fed will probably want to wait another month or so to better assess how growth is doing in Q2 before pulling the trigger. But I think we'll see a rate hike, if not June, then very soon after.
Thank you, Philip. Be sure to check back with Dukascopy TV for more updates throughout the week. We'll see you next time.